You know what drives me absolutely crazy? When I see entrepreneurs, people like you and my new clients, paying 40% in taxes while others are legally paying just 0 to 5%. And no, I'm not talking about some billionaires with fancy accountants in suits. I'm talking about regular business owners who just got the correct guidance and discovered something most people completely miss. So if you're sitting there watching while your hard-earned money just vanishes into taxation month after month, while others get to keep 95% of what they make, this AmiFast video is definitely good for you. Because I'm about to show you exactly how Hong Kong's offshore companies actually work in 2025. So let's dive into it. Hi, my name is Arturo Hamel from AmiFast, and the reason we make these videos is because our purpose of existence as a company was, from day one, and will always be though, to help entrepreneurs like you maximize income and slash taxes with smart global strategies. Check out amifast.com, our website, if you want to explore more or chat with us or schedule a meeting. We're always happy to help. So, Hong Kong, the world's third-ranked global financial center, third only to New York and London, by the way. And it has been a massive financial hub for decades now. But in 2025, it's becoming even more magnetic for entrepreneurs flocking to it from all across the globe. But why is that? While pretty much every other country is raising taxes, Hong Kong still has one of the most business-friendly tax systems. And for very good reasons, of course. Let me break this down for you real quick. Hong Kong uses what they call a territorial tax system. What does that even mean? Basically, you're only taxed on income that comes from inside Hong Kong, not on your worldwide income. So if your business operates internationally, which, let's be honest, most online businesses do these days, this is absolutely game-changing. But look, I'm obviously not here to draw you a rosy picture. I'm gonna be straight with you as always. Hong Kong isn't just for everybody. So before we dive deeper, let me tell you who this strategy actually works for and who should probably look somewhere else. So this strategy would be perfect if you are a digital entrepreneur with clients outside Hong Kong or running a dropshipping business, and also, for example, a consultant or service provider working with international clients, creating courses, for example, also, or selling digital products and trading goods internationally. But it's probably not for you if you are operating physically in Hong Kong or needing to invoice Hong Kong clients locally or not willing to keep proper documentations, which we promptly advise you and you should be doing anyway. So if you are in the first group, which most of you watching probably are, get ready because you're gonna save a lot of money in this video. I've been helping entrepreneurs optimize their tax situation for years now, and I've seen way too many smart people miss out on these strategies because they think it's either too complicated or too legitimate. But trust me, if you follow my guidance in this video, you're gonna be fine. And it's 100% legal and actually way simpler than most people think. So guys, why is Hong Kong specifically such a dynamic option right now in 2025? First off, Hong Kong has a corporate tax rate of just 16.5%, which already beats most Western countries by a mile. But with the right structure, you can potentially reduce your effective tax rate to 0% on foreign-sourced income. Just think about that for a second. Imagine keeping virtually all of your business profits instead of watching 30 to 50% just disappear to your government. It's a kind of mind-blowing when you think about it, isn't it? Now, how do these Hong Kong companies actually work? Because honestly, there's a ton of misinformation flooding around out there, but don't worry, I've got you covered. First thing you need to understand, and this is super important, simply having a Hong Kong company doesn't automatically mean you pay zero taxes. The structure has to be set up correctly. And don't forget this, the key principle here is something called source of income. Hong Kong only taxes profits that originate from within Hong Kong itself. And if your business income comes from outside Hong Kong, which most online businesses it does, it could potentially be completely exempt from Hong Kong's profit tax. For example, say you're running an online store, selling products to customers in Europe and the US. Your suppliers are in China. and your customers are in Western countries. And all your negotiations and contracts happen outside of Hong Kong. And in this scenario, your income is considered offshore and could potentially be exempt from any Hong Kong tax. And this is absolutely crucial because you need to structure everything properly and maintain documentation to prove the offshore nature of your income. And no, this isn't about creating fake paperwork or anything sketchy like that. It's absolutely against our core values to lead you to that, anything illegal or harmful for your business. So we definitely not recommend doing that. Another huge benefit of Hong Kong is that there is no withholding tax on dividends, none whatsoever. So once your company makes a profit, you can distribute it to yourself as a shareholder without any additional tax in Hong Kong. So now compare that to, I don't know, pretty much any Western country, or you're taxed at both the corporate and personal levels. It's basically double taxation, which is just crazy if you think about that, right? Now, I know exactly what you're thinking. This sounds too good to be true. And look, I get it. But again, there are some requirements and potential pitfalls I'm going to tell you about. First thing, Hong Kong is super serious about substance these days. The days of having a paper company are over. You need real business substance. Now, this doesn't mean you need to pack up and move to Hong Kong. That would be ridiculous for most people. But your company should demonstrate genuine business activity. So this is important. And what does it actually mean in practice is that it means having a legitimate business address, opening and maintaining a real bank account, keeping accurate accounting records, accounting, very important, and filing all your annual returns. So basically, you need to be able to show that your company is making real business decisions, like every normal company does, right? Let's talk about banking. Opening a bank account in Hong Kong has gotten a lot more challenging in recent years as all of these increased compliance requirements. However, and this is also very important, it's absolutely still possible if you know the right approach, like we do. Traditional banks like HSBC and Bank of China have some pretty strict requirements, and they often want you to actually visit Hong Kong in person. But there are now these digital banking alternatives that make the whole process way smoother. Banks like Neat, and recently licensed by the way, Airwallex, offer business accounts that you can open remotely. So they still do thorough compliance checks, but at least you don't have to fly halfway around the world for a transaction. And trying to handle everything themselves is a huge mistake that I see with clients. They find some cheap online services from their company for like 300 euros or something. They got completely frustrated when they can't open a bank account or when they suddenly face unexpected tax issues later on. So guys, do this the right way with the right consultant. And this brings me to probably the most important point. Professional advice. It's not an expense. Please don't see it as an expense. It's an investment. Seriously. Spending a few thousand upfront on proper structuring can save tens or even hundreds of thousands in taxes down the road. So let me walk you through the actual step-by-step process of setting up a proper Hong Kong offshore structure. First, you need to incorporate your Hong Kong company. You need a registered office, a company secretary who has to be based in Hong Kong, that's non-negotiable, and at least one director. And you need to provide the standard KYC documents, obviously, and passport copies, proof of address, that kind of thing. And the second step, this is where things start getting tricky a lot, opening a bank account. This requires proper documentation and usually a clear business plan that actually makes sense. And again, this is exactly where so many entrepreneurs completely fail when they try doing everything themselves, because it's not Europe or the US. That brings me to the third step, important one. You need to establish proper substance. So what does this mean? It means having genuine business operations depending on what kind of business you're running. This could include contracts, for example, with suppliers and customers, evidence of work you've actually performed, and proof of key business decisions that are made outside of your home country. But you could also use Hong Kong as a payment collector, and with the right transfer pricing policy, you could also perfectly provide the needed information to any tax authority. So keep that in mind. Fourth step, and don't skip this, you need to make sure you have proper accounting and file everything on time. Hong Kong requires annual returns, audit reports for companies above certain thresholds, and profit tax returns. So miss these and you're gonna be asking for trouble. Finally, you need to figure out how you'll actually take money out of your company in the most tax efficient way possible. And this could be through dividends, for example, or salary, or other methods depending on your personal situation and the tax laws or wherever you're currently living, of course. But remember, your personal tax residency matters a lot. If you're still a personally tax resident in a high tax country, you might still be liable for taxes there, regardless of your fancy company structure. And that is why sometimes combining a Hong Kong company with personal relocation to some place tax-friendly like Dubai, where we are, or Singapore, can create the ultimate tax optimization strategy. And I've seen this combo work and it's amazing. So speaking of tax residency, this brings me to another really important point, and that is substance over form. Tax authorities all over the world are increasingly looking at the economic reality of arrangements. It's not just their legal form on paper. So for example, if you're running your business entirely from, let's say, Germany, but all your contracts are technically signed by your Hong Kong company, tax authorities might look at that and say, hey, this looks pretty artificial, and then try to tax you in Germany anyway. So be very careful with that. So this is exactly why proper planning and executions are so essential. Let me address some of the most common misconceptions I hear all the time. Number one, Hong Kong structures are illegal or involve tax evasion. When properly set up and operated, a Hong Kong structure is 100% legal. And I wouldn't be sitting here talking about it if it wasn't true. So the key is transparency and compliance with all applicable laws. So this isn't about hiding anything, it's about structuring things the right way. Number two, I need to live in Hong Kong to benefit from a Hong Kong company. This is absolutely completely false. You don't need to pack your bags, like I said, and relocate to Hong Kong. It would be crazy for most people. However, and this is important, you do need to consider your personal tax residency situation and make sure your business has genuine substance. I can just use a Hong Kong company as a shell and continue operating exactly as before. Wow, this is super risky. Modern tax enforcement is no joke. They look at substance over form, so your structure needs to reflect economic reality, not just some paper arrangement that look good. Now, let's talk about some of the recent developments for 2025, because things are actually changing a lot. Hong Kong has introduced these enhanced tax concessions for certain industries, and we're talking about shipping, aircraft leasing, insurance, that kind of thing. And they've also really strengthened their position as a hub for intellectual property, with some pretty favorable tax treatment for patent and copywriting royalties. And if your business involves, for example, IP, this could be huge for you. And at the same time, and this is interesting, Hong Kong has implemented these BEPS 2.0 measures, which mainly target these massive multinational corporations with revenues above 750 million euros. And for smaller businesses like most of us, this has actually zero impact, but it does show Hong Kong's commitment to international tax standards. And honestly, that actually strengthens Hong Kong's legitimacy as a tax planning jurisdiction, in my opinion. So looking ahead towards 2026, I'm pretty confident Hong Kong will maintain its competitive tax advantages while continuing to comply with the international standards. And it's this balance of tax efficiency and legitimacy that makes Hong Kong really valuable for international entrepreneurs like us. So let me be super clear about tax planning is not about hiding money or evading taxes. It's about legally structuring your affairs in the most efficient way possible. It's about keeping more of what you earn so you can reinvest in your business, provide for your family, or contribute to causes you actually care about. And that's what this is all about. And this is why we exist, guys. But professional guidance is absolutely essential. The laws around international taxations are incredibly complex and they're constantly changing. So what worked 5 years ago might be completely outdated today. And what's appropriate for one business might be totally wrong for another. So what is your next step? I'm curious. If you're curious about whether a Hong Kong structure could actually work for your specific business situation, head over to our website, emifas.com, and book a consultation with an expert, and we'll take a deep dive into your specific situation and give you a tailored recommendations. And I'm genuinely curious again, do you think a home company might work for your business? Drop a comment below and let me know your thoughts. And hey, if you found this valuable, smash that like button as well, subscribe to this channel, and maybe share this video also with another entrepreneur who might benefit from these insights. We're on this together, right? Thank you so much for watching again, and I'll see you in the next video.